This is a City AM Studios production.
Hello and welcome to Business as Usual, brought to you by Okta, with me, Martin Kimber.
And me, Matt Kenyon. Thank you for joining us for our first ever episode. And luckily for us, the news gods are smiling down today, and we've got a packed programme for you.
Coming up, Shell splashes the cash, spending $16 billion on a Canadian energy company. We'll speak to City editor Simon Hunt on how the war in Iran is boosting the oil giant's coffers. Plus, a major power play could be on the cards at Nationwide's board.
And our editor-in-chief, Christian May, will give us his lowdown on another agonising political set-piece for Keir Starmer. The former Downing Street Svengali Morgan McSweeney is set to be quizzed by the Foreign Affairs Select Committee of MPs as they decide on whether to submit the PM himself to questioning.
And we've got our senior legal reporter Maria Ward-Brennan on the carnage engulfing the big four accountancy firms.
Let's kick off the programme with some corporate results. We are very lucky to be joined by City AM's El Capitan of Capital Markets, Simon Hunt.
Hello, and can I say it is an honour to have made an appearance on your inaugural show. That's really quite something.
Simon, there's no one we'd rather have.
The first appearance on the first show.
Yeah, on the
possibly
first segment.
the last. We'll see how this
possibly
goes.
Possibly the last. Well, thank you very much for coming and joining us. First off, let's talk about BP. They've got quarterly results out today, and it's the first for the new chief executive, Meg O'Neill, after early signs that the group has had a quote-unquote exceptional first quarter. But there is still a little bit of spiciness going on for the firm. They've had a pretty major board rebellion, which happened on Monday. Simon, what's going on?
Yeah, so BP had a big footsie-wootsie last week. It doesn't happen very often where a big company will lose a shareholder vote. But BP lost not one but two shareholder votes. One on a plan to scrap its climate reporting, which a number of major shareholders were not especially happy with, and a second one to cancel its in-person shareholder meetings, which again, shareholders said, no thank you. So this is another big test for BP because they can't have another footsie-woopsie. They need to make sure that shareholders are on board with this. And it's also a sign of shareholder might on the FTSE. It's not the case that companies can just pass any motion they want and get away with it. There are some big active shareholders in the market who are prepared to vote things down when they want to. And I suspect if other big companies put similar votes through, such as this plan of BP's to try and scrap in-person meetings, they might suffer a similar fate.
Simon, two things on that point. I want to put a very strict embargo on the use of the phrase footsie-woopsie, and I don't want to hear it again on the programme, at least until tomorrow. Secondly, so just for people who might be uninitiated with the situation, why is it they voted down in-person shareholder meetings? What are the dynamics at play there?
Well, I mean, I don't know, actually, because this is quite a bit of a new situation. I mean, up until now, pretty much every company has in-person events, although they're not particularly well attended, and most people will join online or virtually. But there has been this move to try and sort of streamline processes, make it easier for these events to be handled. You know, there is the cost of having to put on a big in-person event in central London, etc. And from the company's perspective, it's a lot easier to manage these kinds of meetings. You know, if particularly with these oil companies, there have been, activists have showed up and caused a bit of a stir, or people ask controversial questions that the board don't necessarily want to answer. If you do this virtually, then, you can literally just choose. Yeah, you can literally mute people.
Wow.
And you can choose whose questions you want to answer. So any particularly challenging one, you can just not pick them.
I'm getting
in
Jackie
the
Weaver
meeting.
vibes from the pandemic.
Yeah, she does have the authority in this case. I suppose a lot of the results are all going to be caught up in the conflict in the Middle East and the ongoing war in Iran. But it's also quite a big turnaround from last year. I mean, there were rumours of a hostile takeover as recently as last summer. Now share price way up. What are the sort of profit dynamics at BP? Like, is this an Iran thing? Is this a broader turnaround?
I think at least for the last couple of months, Iran has been the driving force. You have to have lived under a rock for the last couple of months if you don't now know what the Strait of Hormuz is, and that, as every newspaper in the country has reported, it carries a fifth of the world's oil, or at least it used to until a few weeks ago. So that has caused the oil price to surge, and BP are definitely reaping the benefits of that. And you're also seeing some consolidation in the market. There have been lots of speculation that Shell was going to buy BP, but that share price surge we've seen maybe means they're too expensive now. I don't know. But Shell this week have also bought a Canadian oil producer for $16 billion. So maybe that's where they've deployed their resources instead.
It's also banking reporting season. Lots of results coming out very soon, but it's Barclays' turn. Could you give us a clue as to some of the impacts that the war in Iran is having on British financial institutions, the investment division looking pretty healthy at the moment?
Yeah, so there are probably two big impacts from the bank perspective that we've seen from the fallout of the conflict in Iran. The first one, as you touched on there, is the big fluctuations in stocks that we've seen, and those are day-to-day fluctuations. You know, Trump puts one random message out and stocks go up, then he changes his mind the next day, stocks go down. And if you're a really sophisticated investor of the kind that Barclays will have in their droves in Canary Wharf, you can really exploit these massive day-to-day stock moves.
Lots of buying opportunities.
Absolutely. And there was a note from Jefferies analysts recently that said the bank's income from high-speed market volatility trading is 3.5 times larger than the fees pocketed from traditional investment banking.
Gosh.
So this is massive for them. They're doing incredibly well as a result of that. And the second impact is, as we touched on earlier, this surge in the price of oil has massively shifted analysts' expectations about the interest rate horizon. And we were expecting multiple interest rate cuts from central banks this year. That's kind of been torn up now, and that means interest rates staying higher for longer, and banks are traditionally the beneficiary of that.
One more story I just wanted to ask you about, Simon. We've seen another, on the topic of board shenanigans, another bit of controversy and bit of drama on the board of Nationwide. Can you tell us a bit about what's going on there?
Yes, so we had BP's shenanigans last week, but maybe there could be a Nationwide non-footsie whipsy. See, I've not
I actually had put an embargo on that.
Got away with that,
It's a different phrase because it's non-footsie.
Yellow
so
card.
They're not listed. So Nationwide has had quite an interesting growth journey the past few years under their new CEO, Debbie Crosby, who has come from a banking world, not from the sort of traditional building society world, and she wants to sort of make Nationwide less a boring building society and more of a sort of traditional bank. And the sort of pinnacle of that has been their acquisition of a bank in the form of Virgin Money, which cost them several £billion. But Crosby is also not a big fan of democracy because Nationwide members were not given the right to vote on that deal, which is a really massive deal for them in terms of their history, quite transformative. And so this Nationwide member by the name of James Sherwin-Smith has kicked up a bit of a fuss about this apparent lack of democracy. He wasn't especially happy with this Virgin Money deal, and so he has launched a sort of one-man campaign to make himself a board member.
Very interesting. We'll be keeping a close eye on that. And thank you very much for joining us. I'm sure we'll see you again later on in the week.
Right, coming up after the break, we'll be speaking to City AM's editor-in-chief, Christian May, with a look ahead to some bombshell revelations expected in Westminster. Don't go away.
This episode is brought to you by Okta. AI agents are everywhere now, quietly making decisions across organisations. That's great until you stop and think, who's in charge?
If you don't know who an agent is, what it's connected to, or what it's allowed to do, you can't really trust it to act in your interests. That's the bit Okta focuses on. They secure the identity of AI agents, so there's one clear layer of control across the whole system.
Which means every agent has a clear identity, permissions, and a line of accountability, even as things scale.
Risk becomes something you manage, not guess at. Secure every agent, secure any agent. Okta secures AI. Now, we couldn't launch a brand new City AM podcast without inviting in our editor-in-chief, Christian May.
Well, you could have done. I just wouldn't have commissioned a second series.
In many ways, this feels a bit like when Saturday Night Live brought Tina Fey on for their first episode.
Yeah,
You got to see that collision of worlds,
Yeah.
that broader universe expansion.
But we couldn't afford the Foo Fighters, so we don't have those. So we are about 40% of the way through Keir Starmer's worst week in power since last week. We're about to see Sir Keir's ex-chief of staff, Morgan McSweeney, who, from what we can tell, played the part of the rat in Ratatouille, sort of pulling tufts of his hair, making sure he didn't oversalt the linguine or stop the boats or something like that. We're going to be finding out from him what he knew about the vetting process of Peter Mandelson before becoming ambassador to Washington. MPs are also set to vote on whether to refer the Prime Minister to a parliamentary investigation on the matter. Christian, what are you hearing from analysts and economists on the future of the Starmer premiership?
Well, I think it's rather depressing, the extent to which people in business in the city, and indeed perhaps in the media, have just got used to the kind of continuing crisis in British politics. But it feels perhaps more acute on the grounds that this entire government came into being on the promise that those days were over, that all that psychodrama and perma-crisis, however you want to describe it, of the dying days of the Tory years was over, and now the grown-ups are back in the room and everyone can breathe a sigh of relief. And that really didn't last very long at all, a matter of days or weeks, in fact, I think, after the last election, taking us up to where we are now, which is a situation in which the papers and our inboxes and phones are full of people briefing, at the moment largely anonymously. The Prime Minister is basically done for, and that he's being saved by the fact that nobody's quite ready to move against him, or that there are too many factions in the Labour Party. But whatever it is, it's certainly providing something of a headache for market participants. We get now quite punchy briefings from banks in the city warning that bond markets would react very negatively to a leftward lurch, perhaps under Angela Rayner and Andy Burnham, that the instability itself is now a problem. And of course, people saying who are trying to liaise with Downing Street or work with the Treasury or engage with the business department, whatever it might be, are basically saying that there is only one topic of conversation and that nobody's really focusing on much else beyond how long the Prime Minister might last for. And so to that extent, whether or not Keir Starmer limps on and just continues to be Prime Minister of a fairly battered parliamentary party for the next couple of years, or whether the elections next week, I think it's next week, isn't it, or maybe a couple of weeks' time, are so bad that people start to move against him, it adds to the sense that Britain is increasingly difficult to govern. And, of course, that creates headaches for business and people in the markets.
On the subject of those May elections coming up, Rachel Reeves is set to try and shake off some of the negative consequences of that, what is expected to be a drubbing, with a big speech on growth in June. She says she wants to go further and faster. Now, is that even possible?
I mean, it's certainly not possible to go any slower. A big speech on growth. I mean, that's code in the Labour Party these days. That's code for saying warm things about getting closer to the European Union, which I think they have figured out is probably, as far as they can see, the most attractive and possibly doable pro-growth measure that they can talk up. And that will become a big political row. Of course it will, with two main parties on the right who would be opposed to that. I've often said that this government has done some good things on growth. They've just been undermined by other things they've done. And all of the good things they're trying to do on planning reform, big infrastructure projects, etc., are necessary, but not sufficient. And indeed are many years off from bearing fruit. And I've criticised the last government for not having pulled some of those levers. But a lot of the things this government has done in the short couple of years they've been in office have undermined what other kind of pro-growth or pro-growth sentiment work that they've kicked into the long grass. So another speech from Rachel Reeves is unlikely to move the dial, not least when you consider the impact of the Iran war and the downgrades that have now been slapped on this country. Some people would say that growth was beginning to tick up a little bit. That's probably true, but not to the extent that would have made any of us feel or indeed be much richer. But now it's been slashed again, probably looking at 0.8% this year growth, according to the IMF, which is dismal.
It is true that even when the government seems to have good economic news, it tends to end up being bad economic news in the end. So, Christian, we've also had some data come through this morning, which looks like it could be quite good news about decelerating shop price inflation, though it might not quite be as rosy as it looks. What do you make of this data?
Inflation in this country at the moment is almost a phony war. We'll come back to the shop price inflation data from today, but overall inflation, yes, it's ticking up. People actually expect that overall that headline rate might decline in April because of the impact of various regulated prices and that sort of thing, before then spiking again, perhaps as high as 4% over the course of the summer, when the full impact of all those increases in fuel and fertilizer and hydrogen prices are all fed through into the system. So inflation is far from a done deal at the moment. On shop price inflation, yes, it did dip in April. There's a lot of discounting going on at the moment, as you would expect in an environment where consumers aren't feeling terribly confident. But I don't think anybody expects that trend to continue.
Christian, thank you very much. Now, there are choppy waters ahead for Big Four accountancy firms. That's, of course, Deloitte, PwC, EY and KPMG. The professional services stalwarts are being hit with some pretty fundamental questions about profitability and, of course, AI. More alarmingly still, we could be seeing the end of some of the absolute classic professional services perks. To unpack all of this, we're lucky to be joined by City AM's in-house expert on the Big Four. Welcome, Maria Ward-Brennan.
Hello, all.
So you've got a long read out today about these challenges. First of all, how much chaos, carnage are we seeing in the sector?
Yes, so myself and Rosie have a long read on it today because, again, it's just another plate being dropped. It's like a complete spinning plate of issues going on at these Big Four firms. And then latest is really looking at the equity partnership level. So the cuts that we've been seeing in the headlines over this few years, actually, is now going up to the most senior of the seniors, where KPMG is reportedly sort of trying to shift some of the equity partners off its books. And now for the listeners, sort of equity partner is people who own a chunk of the business. Like they have the piece of the pie. It's not just you're a senior member of staff. You actually have paid money in and you're on the books to get your profits back.
How do you go about doing this? Are they being demoted? Are they losing equity? What's the sort of dynamics at play here?
Yeah, so they're having conversations. So as usual with a situation like this, and this is why it's always been quite tough to buy people out of the partnership level, because you physically have to buy them out, because they've pumped money into it, into the profit pool. So you need to remove them by giving them their money back. And then they're sort of having these conversations about sort of taking them back down into like a salary partnership level, where you just are a partner, nice shiny title, like you can go around and tell everybody, oh, I'm a KPMG partner, a Deloitte partner, but you're just earning your salary rather than getting a piece of the profits.
But they lose the parking spot.
Indeed.
I'm quite proud of us, actually, for doing a business podcast and not yet using the word AI. But here we are.
We lasted to the 10-minute point at least before
We've lasted a while. How much of this sort of professional services consulting work, whatever that is, can be done by AI, and who looks sort of most at risk in these firms for the chop?
Yeah, so obviously when it comes to the Big Four firms, consultancy is just one arm. They also have the audit side of their practice as well. Now, the way the Big Four work is they take on, I think, about 40% of audit work, but because of the red tapes around that, they can't touch those clients on the consultancy side. So they take on whatever they can around the consultancy work, and with their names and their sort of reputation in the market. When the government calls or when a private company calls, is usually they pick up the phone in terms of whoever can handle it without avoiding conflicts of interest. The only problem is consultancy is probably one of the worst now affected by AI when it comes to all of the broader professional services. Now I'm including law, accountancy, you name it, in terms of that, because people are pulling back. Businesses are investing in their own AI, and obviously you keep in mind, there used to be a bit of a laugh on the market that you call in a Big Four consultant, they will do you a fun little bar chart or like a PowerPoint piece, stick several juniors onto it, charge a lot of money to a business that wouldn't be able to have the staff at the side to be able to do this. So with that, when businesses invest in their own AI and AI being able to do a lot of tasks now, internal tasks, it is sort of taking it back from what once you would have called on like KPMG or Deloitte or whatever the case might be.
Maria Ward-Brennan, thank you very much for joining us. We leave it there only for time reasons, because that is all we have time for today. Thank you very much for listening to our maiden voyage aboard the HMS Business as Usual, brought to you by Okta.
Now, don't forget to subscribe to our daily newsletters and, of course, to download our app.
It even has free puzzles now. We'll be back in your podcast feeds tomorrow at 6 a.m, but for now, goodbye.